Good morning, ladies and gentlemen. My name is Duncan Wood. I'm the director of the Mexico Institute. It's lovely to see you all here so early at this Wilson Center Mañanera. After a long weekend where I see a lot of bleary eyes, people had far too much fun, I can tell. But I'm very, very grateful for you being here. I have to say, when I woke up this morning at 5:30, I was thinking, yes, this is really the fourth transformation of my life, because I don't normally get up at this time, Arturo, I have to say. But I'm very, very glad to be here, and it's a pleasure to do it, to be able to hear you speak. As most of you know, the Wilson Center's Mexico Institute is dedicated to improving understanding between Mexico and the United States, and of course of the bilateral relationship itself. And for that reason, we're particularly delighted that Secretary Arturo Herrera Gutierrez is here with us today. Secretary Herrera was appointed as Secretary of Finance and Public Credit, Hacienda, in July of 2019 by President Andrés Manuel López Obrador. He previously served as Undersecretary of Finance and Public Credit and was in charge of the Undersecretariat of Revenue. In his professional career, he's held positions in the World Bank, leading several initiatives aimed at improving the performances of the public sector in several countries in Latin America and the Caribbean, as well as other diverse positions in private banks, the government of Mexico City, and the Secretary of Hacienda. He has also been involved in the academic field, teaching courses in microeconomics and macroeconomics at the Colegio de México and courses in monetary policy at New York University. He holds a degree in economics from the UAM, Iztapalapa, a master's in economics from the Colegio de México, and completed his doctoral studies in economics at New York University. I did a little bit of research of my own, Arturo, and I found that you wrote your undergraduate thesis on structuralism and institutionalism at a later date, and probably with something with alcohol in it. I'd like to talk to you about that, because I have a particular interest in those issues myself. I don't want to take up too much time, but I would like to make a special thank you, not just to Arturo's staff for helping to put this together, but especially to Jorge Chavez Presa, a very dear friend of mine who is the director for Mexico and a host of other countries at the World Bank here in Washington. Thank you, Jorge, for helping us out. You've become a very, very good friend to, not just to me, but to the Mexico Institute. And without any further ado, I'm going to turn it over to my friend, my colleague, my boss, Ambassador Tony Wayne, the co-chair of the Mexico Institute Board, to lead this conversation. Tony.
Thank you very much, Duncan. And again, thanks to all of you for getting up early and being here. I see many familiar faces who know well the issues we're going to talk about. And Arturo, thank you for getting up early and starting your day at the same hour as your president is starting back in Mexico City publicly. You started a lot before that, I know. So I'm going to build off of the IMF report from the consultations that you had recently. And for the first time, Mexico agreed that this report would be made public, which is a big step for transparency. Congratulations on doing that. But it is a tough love report from the IMF. They praise a number of things that you're doing, but then they talk a lot about the downside risks, and that including the costs of the austerity budget that you're implementing, that you had to help design, the optimistic, it says, assumptions for GDP growth, oil production and tax revenue, in consumer spending, which and then they talk a little bit further down the road the danger of an emerging fiscal gap of 0.5 to 1.5% GDP 2020 to 2024. So they're laying out a number of their worries and concerns, and then they make a number of recommendations. And then, as you saw, Moody's added to the positive, the tough love message by saying that their prediction for growth, they've reduced it to 0.2% for this year, and then they have the same as the IMF for next year, 1.3% of GDP. So in this context, I'd like to ask you to talk a little bit about how you see managing these threats, and maybe we could start off a little bit with the difficulty of managing public revenues in an economy that is not firing on all pistons yet. And then particularly if if there are some of these downside risks become a bit sharper, and one of them which the IMF points to is the possibility of another downward credit look at Pemex, and as you know, they recommend revisiting the business plan for Pemex. But you probably see some other themes around this. So if you could talk about how you see managing these risks in the year ahead.
Yeah. Can you hear me? Okay. Usually I'm accused of speaking very, very loudly, and I tend to do it particularly when I'm treading around a delicate topic. No, first of all, thank you for the invitation. This is really a great opportunity to chat with you. And let me start with your first comment. This is indeed the first time that we decide to make public the report of the IMF. Usually the countries have the privilege of deciding or not. Mexico has never done it in history. And there was something that we were thinking very carefully about that, which is given the many challenges that we have in the world economy, but also in Mexico, we thought it is important to have an open, transparent, and constructive discussion about it, regardless if we agree or not with some of the topics. Let me start with the issue related to public revenues that you mentioned. And for me, it is true that in a slowdown economy, there are certain challenges about how to collect taxes. But for me, the problem is unfortunately deeper than that. We are a country which is not used to collect taxes. Mm-hmm. We have a budget of slightly more than 20% of GDP, but only 13% of those resources come from taxes. Right. And the reason, in retrospect, it seems kind of obvious. We were enjoying for many years a windfall of resources coming from oil. Not many years ago, probably 10 years ago, around 8% of GDP was coming from oil revenues. Now it's only half of that. So one of there were several. I would say it was a blessing in disguise, but also a challenging issue. The fact that we were enjoying oil for a long time, and actually it kind of covered some of the problems that we have. Particularly when we were having Cantarell, which was a very generous oil field, we didn't have to run the company in a proper manner, and we didn't have to collect taxes properly. So some of the issues of the secondary effects of that is that we got used not to pay taxes. So there's this say here that there are two things that you cannot avoid, taxes and debt. Apparently taxes you could avoid it in Mexico. So what we are doing now is trying to face this in a two-stage process. Mm-hmm. We have been very open that we would like to have some sort of reform for the second half of the administration. But during the first part of the administration, what we want to focus is on tax administration, on how to properly collect the taxes that we are already authorized to do it, but for one reason or the other, we are not doing it. So some of the things that we are proposing to the amendments that we are sending to Congress are related to that. Mm-hmm. Some seem to be very obvious and are part of the discussion, international discussion, which is about how to properly tax the digital economy. In Mexico, the digital economy is slightly more than 5% of GDP. We are reaching agreements with the Ubers of the world, etc. So that's where we are focusing for the next couple of years.
Okay, one of the areas, again, to come back to energy, the IMF talks about is the need to take a fresh look at the business plan. And I know this is a hard thing to look at. I know your president has strong views on it. But they, again, recommend looking at more partnerships with the private sector, especially in upstream, in order to start changing the revenue flows and production. Is there any chance that the IMF's and other people's recommendations will have some positive responses from the government?
So there is. I mean, it's the way we are approaching it is what we are trying to disentangle what were the relevant the relevant issues that were obstructing a proper growth of Pemex. So let me just give you some numbers to put this in a context. In 2003-2004, we reached the highest point of production in oil, which was around 3.4 million barrels per day. By 2012, that was 2.4 million barrels per day. At the beginning of 2018, it was 1.9 million barrels per day. And by the end of December, last December, it was 1.6 and some cents million barrels per day. So we basically have a decline in oil production over a 14-year period, but over the last year, we lost almost 300,000 barrels per day. So the main issue for us is how to stop that fall on production. And at the same time, and particularly over the last 6 years, the debt of Pemex increased from $50 billion to $107 billion. So in the last 6 years, we basically lost 1/3 of production, but the debt was increased in twofold. So the way we started to approach this was first to invest more in Pemex. So we have been milking Pemex for decades. It was the first time that we actually did a capital injection. We reversed the direction of the flows. It was so unusual that nobody actually knew how to do it. And some of the results are really encouraging. First of all, that decline in production was stopped, then it was stabilized, and now it's increasing. As of the end of September, we are producing around 100,000 barrels per day more than at the beginning of the year. That's in terms of the production. In terms of the financial side, we just concluded last week a very, very large operation that is going to move around $18 billion of debt that was due between now and 24. So we have already achieved two things. One is stop and start reversing the direction of production in Pemex and addressing the short-term constraints. There's one issue that we are still trying to think about it, which is part of what was achieved was due to a change of strategy. We moved some of the production and exploration to shallow waters and to land as opposed to deep waters. But deep water is a twofold challenge in several ways, and it's also a point in case of something we should avoid, and I'll go with that. First of all, it's much more complex. We were talking about baseball just before entering here. The batting average is between 20 and 25% in deep waters. You have to basically explore 4 or 5 fields before you actually find oil. But probably more important is takes a long time. It takes around 7 years of exploration, 3 years of development, and then after the 10 or the 11 year, you start producing oil. And what I mean, first of all, we need to take really a long-term view when we talk about deep water. But something that for me was very interesting is that whenever a government tries to advance a reform program, there's always going to be some resistances to it. And there's always that temptation to oversell the reform. And when the energy reform was approved, we were producing around 2.3 million barrels per day, and we were supposed to be producing already 3 million barrels per day right now. And when you talk with the people in the private sector, they always say, we never promised that we will be producing oil that early, right? So what we need to do with a private sector, in the oil sector, is to allow them to keep unfolding the projects that they already have. So you mentioned one, and let me conclude with this. You mentioned one of the forecasts or one of the comments of the IMF, if it was too rosy, our forecast for oil production.
Right.
What we explained to them, it was around an extra 60,000 barrels per day are coming from the private sector. So some of these partnerships are already yielding results.
Okay. Well, good. Well, I'm sure there'll be some other questions when we go on, but I'm going to move on here back to the non-oil sector revenues, because the IMF said this should really be a top priority. And you mentioned going after taxing digital. Well, that's good. That's one thing. But as they point out, and you admit also, the practice is very low collection of VAT taxes and other taxes in Mexico. People escape taxes and not death, as you said. So what steps do you foresee doing over the next year or two to increase that collection efficiency?
So first of all, we are changing the legal structure of tax collection. We are making there's a long practice everywhere, including here, that some of the taxes that we paid, we did not actually pay them directly to the IRS, but it's actually withheld by somebody. My salary, when we pay in Mexico, the value-added tax when we go out to have dinner, it's actually the restaurant, the one that withheld the tax, and it paid directly to our IRS. So what we are introducing right now is a series of measures to withhold the tax. So these are not new taxes. It's a different way to collect taxes that were not done in Mexico. So a lot of it is related to facilitation in terms of paying taxes, and that's like the nice phase of tax administration. We are also dealing with a nasty phase of tax administration. We are strengthening some of the measures. So we were having a series of frauds in tax invoicing by massive. The increase in value-added tax returns increased twofold between 2014 and 2017, and the economy did not increase twice as much. So a lot of those were actually frauds, and by what we call ghost firms. So what we're doing is, first of all, we are making a crime to engage in this kind of issues. We are changing the way we are auditing that, and we are increasing the penalties along the chain. This has been heavily debated in Mexico in these days, but it has been an interesting debate in many ways, because some people have been raising concerns, and then our response has been, but you are okay, right? We are paying taxes. you shouldn't be worried if you are fulfilling that.
Well, that's good.
Let me just tell you something. I mean, very quickly. I always give this example about here. Like, if somebody wants to avoid paying taxes in the U.S., right, and introduce fake documentation, they do it with the help of a third party, and they do it across the states. I'm sure that that's a crime, and if they are caught, probably they are going to be sent to jail. Well, we do that massively in Mexico, because people, in order to avoid paying the car property tax, they use a fake address from a different state. What I think it's very telling is that actually the license plates are telling you who's not paying taxes. So in Mexico, we are so used to avoid taxes that actually you kind of have an ad telling that you don't pay taxes when you have an outside.
Well, I do remember when it was discovered that there were a number of very expensive cars in Morelos, but the people happened to live in Mexico City, and some of those people were later charged.
By very senior members of the government.
Exactly. So related to this, the IMF talks about this also, but it's the efficiency of public service, the efficiency of delivering services, which is always a challenge, and it's been a challenge in Mexico for a long time. Under the austerity program of this government, there's been a great reduction in the number of civil servants, also a reduction in salaries, number of undersecretaries of others, and I understand some of the good reasons for doing that. But some of the costly reasons could just be that you have a lack of efficiency now, both for collecting taxes, perhaps, but then also for carrying out a number of the other services and then consolidating some of those services with the reforms that were going on versus the programs that have been underway for some time. What's your assessment of the progress of doing that, and how much your public services are being asked to do more than they can right now, given their capacity?
Well, we certainly have been asked to do more. I would like to think we haven't reached a point in which we are asked to do more than what we do, right? I mean, the president is very public that he's actually working on Saturday and Sunday, and he makes sure to call us on Saturday and Sunday and ask for information. No, I think we have to separate this issue into two parts. One is when we reduce resources, actually we don't use it like when we used to have crisis to address a financial issue. We are just sending them to different kind of programs. And I think there was a scope to make some of these reductions. There were things that may have been clearly unnecessary. What I think, what I really I'm concerned is that I don't think our spending was not in line with what should be expected. We have a sort of a problem in the programming of the expenses. I'll give you two quick examples, right? Not here, but in Mexico we have this called aguinaldo, which is like an extra month of payment in December. So therefore the payroll is not paid in 12 parts. Actually in December it's higher, it's twice as much. So when people programmed to pay the salaries in even parts, by definition you are going to be undershooting it. The same happened with public investment. At the beginning of the fiscal year, you prepare the bid processes, you have the bids, you award contracts, so the expenses start increasing little by little. So that part, the part that the program was slightly off from the actual expenses, I'm not particularly concerned. But there's one thing I'm really, really concerned, that while this may be normal in normal times, we are not living in normal times. We are in a worldwide slowdown. And one of the big lessons of the financial crisis, of the Great Recession, is that in a slowdown, governments need to be more active and start to push faster expenses to try to mitigate the risk of the downward part of the cycle. And that's what keep me awake at night, how to make sure that we are doing that.
And along that line, I noticed that the IMF talked about, or they urged to have a more well-defined adjustment path for use after a shock. And the shock could be external or internal. They were leaving it open. What not to interpret them, but how do you interpret that, and how do you think through, when you wake up in the middle of the night, what's your path to adjustment?
No, actually, this is one of the issues that we brought to the table and we started discussing with them. So we do not, one of the things that in my view clearly separate advanced economies from developing economies is counter-cyclical fiscal policy. Mm-hmm. Most, if not all, the advanced economies have clear counter-cyclical fiscal policy. Some of them are linked to the so-called automatic stabilizers, like unemployment insurance, right? So people in a downturn, the people are fired, but then unemployment insurance kicks in, stimulate the economy, you increase the deficit by paying the insurance, but then that is reversed when you are in the upward part of the cycle. We don't have anything like that in Latin America. But we also do not have the credibility to implement it. So if you talk with IMF or if you talk with credit rating agencies, they may think that we may use as an excuse a countercyclical fiscal policy just to expand expenditures, and that we would not be able to correct when we are in the upper part of the cycle. So the way we see it is when you don't have credibility, you buy it. So rather than just running the deficits and then compensate it with superavits, you have to create the superavits before and create funds to do it. And we actually have a fund already, but it's not a countercyclical fund. So our point is that we have to convert this fund, which is a fund for stabilization of revenues, which is an inter-yearly fund, into a countercyclical fund. And we are pretty advanced on that. And this is actually one of my very few regrets of the program we set to the Congress, because I was convinced that we were ready to establish a countercyclical policy, and my colleagues convinced me not. And now I understand, because this, I truly believe it will be something really, really positive, but it requires a lot of explanation. It requires to explain it and to discuss it with the Congress. It requires to explain it and to discuss it with investors, with the credit rating agencies, with IMF, with many actors, and probably requires a little bit more of time to do it.
Yeah.
We intend to send it next year.
I understand that. One final question, and then I will turn to everybody here and invite you to ask some questions. One of the challenges for finance ministers all around the world is that they can see structural reforms that are needed, but they aren't in charge of implementing those structural reforms. And the IMF notes three of the big ones, which there's great consensus this needs to be fixed. One is corruption, and that calls for a more effective justice ministry, or an FHR. Second is labor informality and all the steps that are going to be needed to, well, just make that whole system more formal, and at the same time carry out the labor reforms that have been passed, which are very impressive. And third is public security. And of course, you're creating a whole new National Guard to try to do that. But it also requires that the judicial system be much improved. As you look at it from a finance minister perspective, what does it look like sitting there knowing that there are these big reforms that need to be made, and as they move forward, it will help the economy and help your revenues and help growth?
Yeah. So I'll agree with that, although I have a slightly higher concern right now.
Okay.
So let me actually start with that. I think there's and you said when finance ministers around the world, etc., right? So I think we are living in a very, very tricky times, because when we compare our current situation with a 2008-2009 situation, we are on the opposite side. Very few people saw the financial crisis coming, but the governments were ready to coordinate in the response. Mm-hmm. Now, what is happening now is as everybody is observing a slowdown, but when you look across the world, there's very little appetite for coordination, and actually there's a lot of conflict. Just to mention the most obvious ones, you have the U.S.-China trade tensions, you have the whole Brexit thing, which we don't even know how it's going to end or when it's going to end. So that's what is very challenging, and that's why these particular annual meetings of the IMF and the World Bank are really relevant, because it's about trying to stress multilateral cooperation when facing an issue vis-a-vis having bilateral kind of problems or quarrels. Now let me go back to your other question. I think we have to be very disciplined in exactly how we tackle some of these issues. When I think about the challenges about corruption in Mexico, I tend to think about it in three different levels. One which is very important, which is what we call here in the United States leading by example, right? So that's very important. So the president is very careful of not being himself very austere. Then we have to be very austere, and then you have a cascade down. And that's really, really important, but it's not enough. You need another dimension. The second dimension is you need systems to manage the government. So something that in my years here in DC I learned is that most of the countries are now in the several phases of what is called IFMIS. It's not a very sexy topic, but it's called Integrated Financial Management Systems. Right. Basically, every single country in Latin America has one, with the exception of Mexico. We have tried 3 times. I think Jorge Chavez Presa was involved in the first one around 20 years ago, and we don't have it. So basically, what does this mean? Among many other things, is that you cannot trace a payment or a contract or something in all his phases through the same system. That means that there's a lot of hands which could get involved in that. So that thing we are already fixing. We are starting to prepare what we hopefully think it will be the first launch of a financial integrated management system for Mexico. And the third issue is that corruption does not happen in abstract. Corruption happens in very specific sectors, and it requires to really understand those sectors, understand what are the levers, and work on those ones.
Right, exactly. Okay, I'll let you. We'll think about the others, and we'll switch and invite questions from our guests this morning. Chris Wilson from the.
Thank you so much, Mr. Secretary. Chris Wilson from the Mexico Institute. I have to ask about labor reform. Obviously, us here in Washington, where many of us are watching the potential passage of the USMCA very closely, and one of the big concerns from Democrats, especially in the House, has been whether Mexico has the budget ready to fully implement its labor reform. I think what I've heard is that there's around a 30% overall cut in the budget for the labor ministry. How in the face of a cut like that can the country be prepared to implement a huge overhaul of the labor system, which I understand requires revision of somewhere in the range of 500 to 700,000 contracts over the next 4 years. So just a monumental task that's ahead. Thanks.
Should I go? Okay. Yeah, this is the other thing that keeps me awake. So I think, and let me just give you a little bit of context. We are living in uncertain times. We do have a free trade agreement. We do have NAFTA, but it will be a completely game changer. It will happen to ratify the new agreement in a context of uncertainty around the world. It will be great advantage for Canada, Mexico, and the U.S. to have this agreement ratified. Now we think we are really, really close, but as you point out, it seems that there's only one specific concern on one very specific side of the aisle, on the Democrats about labor reform. Let me mention 2 or 3 things about it. First of all, this is a reform that we wanted to pass. It's not a reform that we signed in order to be able to sign a trade agreement. We are really committed to that. But it's a labor issue, but I'm finding myself giving more explanation more often than not in these days, because the main concern, as you said, is about the budget. When we see the budget of the labor ministry, we see 3 things. We see what you could think about of the standard expenses of the labor secretariat, what you would think the expenses that are related to the reform, and there's one very specific program, which is a trainees program, that Youth Building the Future, which is a 12-month program. So that program started, I guess, more or less February, March. And the first class of that program is going to graduate in February, and then little by little you start introducing the new class. That program is the one who accounts for all the reduction, but because it's under the same budget envelope, it creates this mix-up. Now, about what is left after you eliminate this glitch in that, there are 2 things that we need to explain, and that we have actually some congressmen from the Way and Means Committee last week in Mexico. First of all, at the federal level, at the level of the Supreme Court, we currently do not have a labor area there. So part of the reform is actually to create it, and that requires to retrain some of the judges, which were not trained originally to address labor issues on that. Secondly, some of the expenses are going to happen at the state level. So what we need to make sure is that they actually have the budget, but it's not necessarily financed from the federal budget. And the second thing, there's some issues regarding to how much could a dollar could pay here and could a dollar pay in Mexico. And I think that issue related to scale is one of the most obvious, but is one of the most challenging to do it. Around, I guess it was two weeks ago when we were discussing that, I was browsing the New York Times, and I saw one very specific news. It was about the need to rehaul and modernize the subway system in New York, right? And the budget for that is $58 billion, right? So it's a huge city, it's a huge system, but it's just one transport system in one city, right? $50 billion is more than the whole federal participation to states in a year, right? So to achieve many of these things in dollar terms, we require much more less money than we do it. But I mean, part of my team is coming to the IMF World Bank meetings, but part of my team is coming to try to explain this issue. So we are working on this week.
Definitely a complicated issue. But just to reiterate what Chris was saying, it is the issue that those skeptical about USMCA are focused on. So it's good that you're here to explain it, and there are a lot of people who will look forward to learning more. In the far back, please, in the center.
Hi, Ariel Moutsatos from Noticieros Televisa. I don't know if I could have an answer in Spanish. If not, that's okay. I would like to know if you could give us a detail of the measures that Mexico is taking regarding the recession, the upcoming recession, that we have many signs it's going to come in the next year or so. Do you think it's coming? And if so, what are the measures that Mexico is taking to prepare? Thank you.
Sure. So I'll quickly go over in English, and then I'll switch to Spanish. So first of all, as a finance secretary, I have to be very careful with the semantics. So we have a slowdown. We don't have a recession yet. A slowdown is worrisome anyway. So we are doing three kind of things to try to mitigate the effects of the slowdown, and to try to in a parallel way, try to mimic a countercyclical policy. And I would say there are three of them. One is we are trying to make sure that there are some additional investment in infrastructure with a smaller potential cost on budget. So what we are doing is we already approved a series of projects that were sitting in Fonadit. Fonadit is an off-budget fund dedicated to investment that is going to trigger a series of investments in the States. I'll give you a couple of examples. One is BRTs in Guadalajara and Ciudad Juarez. Those are going to create a new transport system on those cities, and we are putting roughly between 35 and 40% of all those projects. But by us triggering that investment is going to happen. The second thing that we are doing in infrastructure is we are extending some of the concessions that we have in the transport sector, and against those the extension of the terms of the contract, the private sector is gonna invest additional 18 billion pesos. That's on infrastructure, with basically very little impact on the budget. The second part, it goes to the financial sector coming from the development banks. So we are doing a series of things. I'm gonna explain a couple of them. when you get into a slowdown and in a recession, usually there are two things that you observe on the macro side. First is a reduction on the construction sector. The construction sector tends to be a leading indicator, moves ahead in the cycle. The second one is a reduction in consumption, and particularly in consumption of durable goods. So we have a not very often used, it's kind of a development bank. It was a fund for the consumption of workers. It's called FONACOT. So it was not very used right now. So we decided to bring resources from an additional development bank with a credit line to FONACOT to provide 1.2 million additional credits for workers. We are already seeing some increase in consumption. Actually, you see the reports from ANTAD, Walmart, and consumption confidence for the last 2 months. You're seeing that this is picking up again. And the third one the third reason is related to what Tony Wayne was asking me at the beginning in terms of if we have some sort of counter-cyclical policy. And I tell them what we are trying to do now is to advance and to speed up the pace of expenses in Mexico. The way we are doing it is we are moving earlier in the fiscal cycle the bids for México.
Good.
Sí. Hay tres cosas que estamos haciendo para mitigar los riesgos asociados a una deceleración del ciclo. La primera de ellas es aprobamos una serie de proyectos de infraestructura que tienen dos tipos, unos a través de fondos federales que van a detonar inversiones en los estados, como son los BRTs de Guadalajara, el Peribús, en una serie de presas en Nuevo León y el BRT de Ciudad Juárez. Lo segundo que hicimos en materia de inversión fue desdoblar las concesiones carreteras, 6 concesiones carreteras, y estamos estudiando algunas otras más, que van a tener inversiones por 18,000 millones de pesos adicionales en carreteras aledañas y obras aledañas a cambio de la extensión. Esto sin ningún impacto fiscal. La segunda cosa son a través de recursos que estaban prácticamente inactivos en la banca de desarrollo, estamos implementando una serie de programas. Uno es una serie, estamos doblando los alcances del programa de crédito al consumo a través del FONACOT, del Banco del Bienestar fondeamos FONACOT. Estamos también tratando de dar créditos adicionales para la construcción de vivienda a través de la Sociedad Hipotecaria Federal. Y el tercero de ellos es adelantar las licitaciones, incluso las licitaciones de 2020 las estamos empezando en esta parte de la actividad económica, y cuando tú empiezas a tener irte a la parte baja del ciclo, la inversión suele ponerse en un modo de espera, a ver qué pasa. Pero una forma de quitar ese modo es cuando hay contratos muy específicos del lado del gobierno. La contraparte de esos contratos va a empezar a invertir, va a empezar a contratar trabajadores, va a comprar maquinaria y equipo.
Gracias.
Thank you for being here and for taking time to meet with us. Would you talk a little more about the digital tax that you mentioned at the beginning, how you think that'll be implemented, and what timelines, and a little bit about the negotiations going on to try to make sure it's accepted by the companies that perhaps are operating or their products reach Mexico but don't have operations there?
Sure. And there are actually 2 ways in which we are approaching this. As I said during one of my answers, I guess, around 5.2% of the whole GDP is now in the digital economy. That, as you could imagine, is actually a larger share in advanced economies. Here, I'm not sure what it will be, but probably 8, 9, 10%, and growing faster, right? So first of all, we are trying to reach an agreement worldwide about this, because the whole tax codes were written for tangible goods and services, right? So if you go to the cinema here, to the theater, you pay a consumption tax and there's an income tax. But when you download a film in your iPad and you do it in Mexico, it's not clear where is the transaction happening. So if you ask to the Treasury, they say the transaction is happening here, where the Netflix headquarters are. If you ask Mexico or Spain or Germany, and I give you actual examples, they said that the consumption of that film is happening in our country, right? So what we know about this potential international agreement, we know a lot and very little. We know when it's going to happen. So the agreement, and this is leading by the OECD, is that agreement will be reached next year. We kind of know how the agreement is going to happen. So it's going to be sort of a minimum international tax across countries. But other than that, we know very little. Now, in the meantime, there's an agreement that countries could introduce taxes by themselves to the digital economy while we reach an agreement. And we have examples of countries doing that. Clearly Spain, clearly France. You remember there was an introduction on taxes, I guess, to Google and Facebook around 3 weeks ago, which created another area of tension on the trade front between the US and France this time. We are not introducing any new taxes on the digital economy. What we're trying to do is to collect the existing taxes, and the existing taxes are the revenue taxes and the value-added taxes. Mm. So when we approach that, we see the digital economy, we could divide it in three different parts. One is those activities which use an app, but clearly happen in Mexico City or in Mexico. That's, for example, Ubers, right? So the company may be here, but clearly somebody's moving somebody in Guadalajara in a car. So now, what we're trying to do that is to make sure that we reach an agreement with Uber, with Didi, with Lyft, so that they withhold the taxes associated with that. And their value-added taxes, their revenue, their corporate income taxes, those of Uber, and there are personal income taxes, the ones from the actual drivers. And we are, I would say we are already doing that. The only thing that the companies demand is that will be a level play field, so that there will be not advantage for one of them not withholding them. The second part, and this is a tricky one, is in those activities in which there's not a direct consumption of the good, and that typically happen with social media, right? So Facebook do not charge to the people who sign on social media, so they would say nobody's paying me in Mexico. But if you ask the Germans, they would say, well, but if I see a real estate ad for a houses in Berlin, there's some sort of transaction that should be associated with that. And the third one is with contents, like the examples that I was giving about Netflix and Spotify. And now I would say most of the firms involved in that area are willing to pay. They don't like the levers that we are introducing about it, which is that you could actually shut off an application if they don't comply with the taxes.
Interesting. Thank you. Okay, one more question. Well, I think you had your hand up first.
Thank you, Mr. Secretary. I have Santiago Mayoral from Georgetown University. Looking at flagship infrastructure projects from the federal government, currently we are seeing significant changes in the total estimated investment cost for many of them. Can you provide more detail about these changes? Was it estimated error or change of scope?
So which flagship projects are you referring?
For example, the Santa Lucia Airport or the Dos Bocas refinery.
Yeah, no, I think they are probably in line with what was expected. The issues that we are involved with those projects and very large projects, go to very specific phases, And when you start from zero, it's really not, and you are within certain ballpark. The budget issue is not the main concern. The main concern from the macro perspective is how fast could they happen, and they are in line with a project that is starting from zero, but is taking some time. But I don't see any major departure in the budget, and clearly we are not allocating more resources from the Ministry of Finance to what we agree beforehand.
Well, good. Well, I saw we had one question from a large employer in Mexico, so I think we'll make that one the final question from here, from Walmart.
Welby Lehman from Walmart. Can you hear?
No, more
No.
loudly.
Okay. Welby Lehman from Walmart. We appreciate the withholding reforms that you're doing because it does create greater faith within ecosystems, business ecosystems. You can trust your suppliers to be paying their taxes because they're being withheld. The question that I have for you is, given the focus that the president of Mexico placed on formalization of the informal economy and the special role that tax compliant companies like Walmart and others that have large ecosystems of customers, suppliers, and employees throughout the country have that special role in formalization. Is there a plan for collaboration cross-sectorally where these tax-compliant companies and the government can work together on strategies to create those positive incentives for formalization of other actors in the economy?
Yeah, sure. And actually, it's a complex issue. It's not a one-dimensional issue. It has issues related to labor. It has issues related to credit markets. It has issues related to tax compliance, as you say, but also has issues related to the payment system. So let me give you three examples related to that. First of all, in the pure labor market arena, this program I alluded, a program of trainees, actually what it's trying to address is one of the most important obstacles that we see in the formalization in the labor markets, which is a mismatch of skills between the skills that are currently in certain parts of the labor force and the ones that are demanded by firms. So the trainees program, what it's trying to do is to give in-house training so that they get hired in that particular industry or in similar industries in the labor market. That's one of the issues. The second one is related to tax issues. So what we are trying to do with all these measures is to reduce the risk of people going informal in order not to pay taxes. The third one, which is related to that, it has to do with the payment system. Mexico, for a high middle income country, has a relatively very large use of cash in the economy. So only 37% of Mexicans have a banking account. In Brazil and Argentina, which are countries that are very similar, is in the high 60s or in 70s. One of the things that was problematic for that is that people used to complain that the government shouldn't force them to use financial mean of payment because it was costly. Around 2 or 3 weeks ago, it was launched by the central bank, the new CoDi, which is a way to pay to make payments from phone to phone or to any store, a pop and mom store, without any cost. So now we could be able to track it and to make obligatory certain transactions to be done through the financial sector. Now, by definition, those transactions could be now traced. So there will be less incentives to operate on the informal sector. But happy to listen and to learn if you have some suggestions about it.
Well, that's great. Thank you very much, Mr. Secretary, for being with us. And since you mentioned mismatches between workers and skills, at the Wilson Center will be coming out with a new report on workforce development in North America in the weeks ahead. So I flag it to you and hope you all take a look, because it is aimed at trying to address this, and it does recognize the programs that Mexico has put forward, as well as in the United States and Canada, and how we should work together better on that. But thank you so much, Mr. Secretary, for being with us.
Thank you for inviting. I will make sure I read it.